here comes the day-to-day job duties for sales and for traders. So even if you're a sales, if you're working as a sales, I mean these are like some kind of like overall like in general job duties that you're gonna have. So first of all, obviously you're gonna build a relationship with clients. So building relationship can be in many different ways. It could be done during your work office hours. So what you're gonna do is you're gonna hit up your clients through Bloomberg chat or sending them email updates on some kind of like market views or what kind of views you have on the market. Or it might be some kind of like research idea or some kind of like personal idea that you have, or it could be just asking your clients what they think about the markets and what kind of products or what kind of risk reward profile they're looking at right now. And perhaps the more like boring part of the job is going to be the kind of like risk limit setup and onboarding. So, for example, before a client can trade with you, you have to ask them for all these documentations, all these like know your client process, like KYC processes. So you actually need to do onboarding where you need to ask your client to give you like documentation, what exactly the company's doing, and get these documentation into the system of your company to make sure the compliance team actually passes these clients and make them part of a trading partner of you guys, and you also give them like market updates, like I talked to you like I told you 15 seconds ago, and sometimes you have more structured trading ideas for clients. So let's say if you're working for a float credit desk, sometimes you can work with other desks to do some kind of like cross coverage or cross selling for your clients. Let's say if you want to do some kind of like FX swaps together with bonds, then you might want to do cross selling for him or her as well. And depending on some kind of like client appetite, you might want to sell him or her some more complex products, which is going to take the sales effort to line up the expertise of traders and structurers to make sure you give the right price and right liquidity of these products to the clients. So obviously, a lot of people tell me like, oh, so being a sales is just like going out for drinks with clients, going out for dinner, going out for fancy dinner, go play ball games with them. I would say that's partly true, but I think the most value added part of being a sales is how much information you're gonna bring to the desk, how much value you're gonna bring from your client to the desk for the whole sales and trading team, because essentially traders somehow they give a price to clients and sales get some feedback to them. So these kind of feedback back to the traders, as in how competitive your price is, what's the market positioning is like, what the client's doing. I think these are the important things that sales can add value to the bank when it comes to like sales and trading. And I say these are more technical part of the job for sales, and I think that's a very important thing people always overlook. Next off, we have traders, which is basically the role that is closest to the market, I would say. Um, it's pretty safe to say that traders is the one. I mean, traders are the one that's actually taking the risk for the company. So what market making means is, in simple terms, it's just providing liquidity for people to set the market. Always like quoting a two-way price based on your understanding towards the market. And if someone sells something to you, you try to hedge that in the market, and through the bid ask spread you offer, you try to earn a spread and try to monetize the flow from clients. And sometimes you can also take a bit of like small uh, directional positions as well. But because of the rules in the market right now, you're actually not. You have like really tight limits from these regulators and from the banks internally as well. So um, what banks do nowadays is actually not that crazy as what's happening uh, in the past. So I would say the kind of risk investment banks are taking right now is actually not that huge compared to the past 10 years. Also, I'll say sometimes jobs in like traders have work orders as well. So let's say if a client wants to buy this stock at a certain level, and then you basically just try to work him at that level, and once you bought it at that level, you just pass it to him. So if that's the case, there's not much margin you're gonna earn from that. Especially if your clients just give you like a price and say you're gonna work me there. So that's the way that's usually the case where people can't that traders can't earn much money out of it. And then moving on to structurers. Um, Structurers are the ones who work on more complicated products. Let's say some quanto options and some like more complex products with complex payoff, where you have multiple cash flows, different kind of risk, delta risk, gamma risk, and all those option risk and Greeks as well. So structurers are more like in the middle of session trading, where you kind of like a sales, where you have to get information from your clients, as in what kind of product or what kind of return risk reward profile they're looking for. But you also need to have the mindset of a trader, where you need to know like how to price these products. What do you think is the best way to price these products in terms of the liquidity in markets, in terms of the payout structure, and how do you like assess, or how do you price the risk that you're giving to you're taking from a client, um, like in a perfect way, because so that's basically what clients that's basically what structures do on a data basis. And obviously you have to do a bit of like you have to take on a bit of role as a trader as well, while you have to do like a bit of hedging and you have to book the trades, because these trades are really complex, right? um, so yeah, so that's what sales traders and structures do. So you have like some more roles which in general students don't really know. um, so what's the role of sales traders? That's the thing that students always ask. So usually sales traders on the sales side, and um, it's a role which actually comes from equity trading. So the role of sales trading first starts off because in the past you usually trade every single thing over voice, which actually means that if someone wants to buy like a stock, or he wants to sell a stock, he's gonna come to you and ask you for a two-way price, and he's gonna hit you, and then basically that trade's done. So that's what sales and trading is about in the past decade. But now with all these computer systems, you have all these fancy subs outside the market, so you don't really do these kind of like complicated stuff anymore. So you have like algorithms. So with these algorithms coming out, you basically have these kind of like sales traders who perform the function of both sales and trading, which essentially they just monitor the algorithms and they work the orders of the clients with some kind of like special strategies like time weighted average pricing, VWAP, which is basically the volume weighted average pricing, or other methods. So this person actually performs um, both the function of trading and sales, where it's it's more like monitoring the algorithms and like providing the liquidity for clients on some like really basic products, because you don't really need so many people to do like both the sales and the trading function on these simple vanilla products like FX and equities. So moving on to equity research is not really a role that graduates gonna get into, because of the fact that you need to have some kind of like more in-depth understanding of the markets. You also need more solid financial background as well. So I would say that's more like a role which is for people, which is more like a role which is for people who have been working for more like 2 3 years, and they switch or they do a master's, who's got really solid financial background and financial modeling, and I think that's more like the role for them. So I'm not going to go through that in detail. And then next off, I'm going to give you like an overview of the daily routine of a salesperson. So um, it is just how it is. So usually salespeople come in at around like 6:30 or like 7, depending on what kind of asset class you're gonna do. So usually they come back and they really do a quick limb, uh, like to go through, to screen through the news they have, and to screen through the things like sent over by research guys, and they just want to see like what research told them. They're gonna read them through, think about market trading ideas, and also see what happened overnight in the States. Usually they don't really do it when they arrive at the desk. Some of them usually start doing it when they're on the way back to work. So they have this sales meeting, as in they discuss what they want to pitch their clients, or what are the things that they think clients might be interested in this current market environment. And then next they have these kind of like sales and trading meeting as well, where they have like traders and the sales together, which is basically exchanging information. And this is basically how what sales and traders like how do they start off with sales. And then depending on how keen you are, or if you have any really great idea for a client, you usually pick up the phone an hour and a half into the office, and then you just pick up the call and you call clients and see like what's happening, what's going on with their day, what they're doing, what do they think about the markets today, especially if markets move so much like what we have in the markets nowadays, where you have like treasuries moving 10 pips overnight. This is the kind of market where sales usually differentiate themselves because of the idea about the market, because of the market color they can provide to the clients, and it also shows you how important the client relationship management is, especially during tough times like this. And then depending on the market, markets usually open around like 9 to 9:30, depending whether it's like OTC market or whether it's like FX market or it's like equities market. So you just quote prices for your clients and you ask for like feedback back and forth between traders and clients, and that's basically what you do as a sales. You basically pick up chats, and that's pretty much for the morning. And then lunchtime is usually more free for sales, and sales can actually go off the desk. They usually go off for client lunch, or sometimes they get off for the gym, depending on like the culture of the bank. Because some banks usually want both sales and traders to stay on the desk, but some bosses are really more lenient. They don't really care as long as you're doing your job. So yeah, depending on what like depending on what's happening, or depending on the culture of your desk, you might have to stay at the desk or not. And then the afternoon section is basically the same as the morning section, but it's just usually towards the day end. You have some like end of day task, for example, you do some like market wrap up, or you do some kind of like um, analysis on your client flows, those kind of stuff. So that's basically how it's like for the day as a sales. So um, here's just an overview or just like a conclusion of the path working in sales and trading. So usually graduate programs out there right now, it takes you like around 1 to 3 years, like around 3 years. So that's like a typical path. Depending on whether you jump from one bank to another, or you get the right positioning, you might get promoted from analyst to associate within 2 to 3 years, and then associate to vice president usually takes like 2 3 years as well. So uh, in between somewhere like 4 years to 8 years, you're gonna go from as analyst to associate. I'll say to be safe, more like 6 to 8 years. You're gonna be like VP or AD, depending on how your banks call them. Um, and then usually whether you get promoted to director depends on your ability, your expertise, and depending on opening to the bank as well. And then usually if you want to make MD or ED, it's going to take around like 12 to 15 years to be safe. So by that time you're going to be in your late 30s or early 40s. So that usually depends on how good in terms of personal relationship you are, and how good you are in terms of the way you drive the business going forward. It's not just about your ability to do trades or your ability to network with clients. And by that time, a lot of things actually matter to you guys. So um, next off, the exit opportunities for sales. Usually, you can move on to become like sales for private banking or asset management. I would say being a sales is more like a role which is less flexible in terms of career exit opportunities, because of the fact that your skill set is more like a sales role. So it's more confined to sales, so you're not that technical. So it's really hard for you to move on to be like a trader or like a portfolio manager in buy side. I mean, I wouldn't say it's impossible, but it's highly unlikely. That's what I would say. And then obviously for traders, it's more, I would say opportunities is more diversified for you guys, and the prospects are actually better as well. So let's say if you work for sales side as a trader, and that's how you start off your career. So what you can do is you're gonna move on to buy side as an execution trader, where you're gonna execute orders for your portfolio managers, or you're gonna get straight to portfolio management, where you're gonna have like where you're gonna have like a you're gonna have to manage a portfolio. The one who's You're gonna be the one who's actually managing the portfolio, or you're gonna work for hedge funds that's gonna focus on more short-term returns, but that's gonna be like more stressful for you guys, because these hedge funds usually in smaller structures, and then they have really flat structure as well. But people usually get laid off much quicker than these portfolio management companies, which are more long-term investors, I would say. If you're more quantity, you can get to more prop firms, let's say Jane Street or high frequency trading companies, which are more tech heavy in terms of the trading structure. Or you can move on to risk management and become the heads or more senior managers for this risk management functions. So this is basically the exit opportunities for certain traders in general. So I'm not gonna tell you about. I'm just gonna skip through the market players kind of page, because you guys probably know about them already. And then as in basic in the questions, I would say this is one question I want to cover. Uh, why do you want to choose certain trading? So I would say one of the reason why you want to choose certain trading is because of the fast-paced environment. And I would suggest you to answer the question in the following way. So first of all, explain your personality, as in like how you're gonna be a good fit for this position. And next off, go off to show your interest in the financial markets and show your understanding of the job duties. So in terms of personality fit, I would say first of all, you need to be someone who's really self-driven, because the market is always going to be changing. So you have to find answers to questions that you have in mind. So um, that's why I say you must be really like self-driven to move yourself on every single day. Because if you don't drive yourself going on, then you're not gonna like excel in the market. So you have to be really self-driven, and then you have to be a really like uh, you have to be a really disciplined person as well, especially if you're gonna be a trader, because market's gonna be really volatile, and whether you make money or lose money really depends on how tight your stop loss, your take profit points as well, as well as whether you have really good trading setups or really good trading plans set for yourself. And then the next thing is how you can show your interest in the financial markets. So I would say some typical ways could be joining case competitions or joining some virtual trading competitions. Let's say every single year there's some trading competitions by Barclays, as well as JP Morgan, as well as BNP Paribas. So you might want to join these competitions, and if lucky enough you get the prize from them, it's a pretty good boost up for the CV. And at the same time, I would say you can manage like a portfolio for yourself. It doesn't have to be huge. Just put your money in it and just do some real trading, and it makes the whole story more persuasive, as well as in how much you like the market. Then you can also show your understanding of job duties, and that you can achieve it by going into more copy chat, uh, asking some salespeople, asking some like seniors from your school, asking them what they do as a graduate or as a senior, or as an associate or analyst, working in banking for 1 2 years. So these are the things that you can do. And then next on, I'm going to move on to private banking and asset management.